All right, let's talk commitment of traders report and the guy who can break it down. Blue Line Futures, Oliver Slope. Oliver, we look at the Friday commitment of traders report. Is that playing a role somewhat in our trade today?
Well, you've started to see a trend of short covering from the funds. They were net buyers of about 41,000 futures and options contracts last week. The bulk of which was short covering, and that trims their net short position down to 147,000 contracts, which is the smallest net short position since May. Relative to where we saw that position just a few months ago, you'd think this market would be trading a lot higher, but here we are, 15, 20, 25 cents off of the contract lows. And what has been the reason for the lack of really upside follow through on the back of such a monster short cover is the fact that there's still a lot of producers selling that needs to be done out there. So that is limiting the upside. And now potentially, if we can't get a new bullish catalyst to propel prices higher, the funds now have powder to add to that short position once again. So I'm not saying that that's going to happen. The demand side for corn has been relatively constructive over the last several months, and the technical landscape has certainly been a lot more friendly here as of late as well. When you zoom out and kind of look at where we are now as in terms of prices and where we could go, it seems like the market's found somewhat of an equilibrium near that $4 level as we continue to trade in a range. So upside resistance levels that the bulls really want to get out above 413 to 416. Those were the highs from the first week of September. If we can chew through there, potentially we go retest those August highs, which come in the mid 420s.
What about some concerns when we're talking about buyers? China's economy slowing further. I read that headline this morning. And then the National Weekly Ag Energy Roundup showing ethanol down 6 to 13 cents across Iowa, Minnesota, Nebraska, South Dakota. Could that be a concern?
China is definitely a concern. The trend of slower growth has been very apparent there, and over the weekend we got a plethora of more softer than expected economic data there. So the slower growth in China is certainly going to be a dark cloud over this market, I think. And we've seen that really over the last several months in terms of soybean demand as well, where they just really haven't shown up. Now, we have gotten a string of flash sales as of late, which is nice to see, but we really need to see that demand pick up in a more meaningful way to really get this market going meaningfully higher. The thing to be really keeping a close eye on this time of year, once the combine start getting rolling here in the States, it's going to turn to weather in South America. Right now seems to be pretty dry in some key areas in Brazil, and if that continues, maybe that's what offsets some of that softer economic data from the big importer China.
Okay, Oliver, hang on. We're going to come back, talk livestock futures. Market day report continues in a moment. Hard to keep up with what's been happening in Class 3 milk futures, though the October off 15 at 23.87. Year over year, a 26% gain in Class 3 milk. Okay, let's break down the proteins. Oliver Slopes with Blue Line Futures. I gave you a lot there. What are you watching?
The cattle market has been front and center, live cattle and feeder cattle for us. We had a tough August, which kind of is in line with seasonal tendencies, but the market's trying really hard in both live cattle and feeder cattle to carve out a little bit of a low here through September. And so far, they're doing a pretty darn good job at it. We came out of the gates with a little bit of strength this morning. That has since been given back, or a large portion of it. So just kind of chopping around here as these markets test resistance. For December live cattle, that comes in near 180. I think if we can get out above there, you could really spur some more technical buying and maybe make a run towards 182. From there, I think it's going to be limited unless this cash market really starts heating up again. And we saw the 5-area average at the end of last week right around 180. So I'm not sure that that's going to really happen. Commitment to traders report. We talked about it in the grain markets for live cattle. They're net long about 44,000 futures and options contracts. That's a relatively neutral position. So if we can get a bullish tailwind behind this market, potentially the funds look to add and be a little bit more aggressive on that front. The big thing that we're going to be keeping a close eye on this week is a Federal Reserve meeting on Wednesday where the Federal Reserve comes out with their interest rate decision. Right now, it's about 62% chance that they come in with a 50 basis point rate cut. So a lot of uncertainty going into that. That could spill into some volatility in the outside markets, and then in turn spill into volatility in some of the livestock markets as well.
You hit that one right on the head. We've been talking about that most of the morning. So Oliver Slopes with Blue Line Futures. And again, that Federal Reserve.